You are listening to ChartingWealth.com for Thursday, the 13th of October, 2016. Market was up today just barely, and the total market S&P also up barely. The NASDAQ 100 down, gold up. Let's jump right into things. What do we see going on? Well, we have 4 candles in a row, 4 two-day candles. Candle that we see being drawn over the past day is actually a down candle, even though the market was technically up. Our first day of the new two-day candle is down. We use Heikin Ashi candlesticks. In Japanese, that's translated roughly into average pace. It shows us the market is still in a downward flow. We have been moving down in the total market since it crossed over going down on our two-day candles back on the 24th of August. And we had a big range of movements over the last full two-day candle that ended on Tuesday the 11th. And as we opened the market and jumped in on Wednesday, we have a red down candle with a down wick. Our derivative oscillators heated up and our MACD is moving further down over the course of the day. If we look intraday, we can explore a little deeper what went on. Market big down in the morning. Again, it's the average pace. And if you want to know more about Heikin Ashi candlesticks, go to our website or to our YouTube channel or to iTunes and follow our training there on Heikin Ashi candlesticks. Best thing to look at is the video that you can get at the website and on YouTube under Charting Wealth or chartingwealth.com, the website, and you will get a great deal. It's because of that, because of how accurate and helpful in seeing the real pace of change with the Heikin Ashi candlesticks. They're the only kind of Japanese candlesticks we use. And after you do our training, I think it's about 12 to 15 minutes long, you will do the same, I believe. What do we see going on? Market down in the morning, a little bit up in the afternoon. Derivative oscillators continued to heat up since the afternoon of Tuesday. Crossed over in the morning on Tuesday, going down. So that is where we ended up on the total market IYY. Keep that in mind as you look for potential trade entries. Hopefully you got into the down moves when they started there on Tuesday afternoon. Again, what we look for is we look for the market to swing in one direction on the big chart. Then we look for the 4-hour chart or the half-day chart to move in the opposite direction and then correct back over, moving in the direction of the big chart. That's your jumping in point. Want to know more about that? Get our training at chartingwealth.com. If you sign up for a newsletter, we'll send you that training there, how to read a stock chart video, 15 minutes of everything you need to get started into learning how to read these charts. Next, we're moving on to the S&P 500. We are below the two-day trend line, below the weekly trend line. We have another down candle, derivative oscillator heated up. MACD has continued to move down. So we're in a confirmed down trend. What do we see going on in the 4-hour chart? Well, again, we saw a crossover in the morning on Tuesday the 11th. That was your jumping in, your entry point. We saw the market move up in the morning a great deal more than it settled out in the afternoon. Again, just up 0.13%. Look at this though. Listen to this. Derivative oscillator heated up. That means downward momentum continued even greater in both the morning and the afternoon on Wednesday the 12th. And also the derivative oscillator and the MACD rather continued to move down along with the signal line. So we've continued to see more signals of down movement. Now let's take a look at the Qs, which is the NASDAQ 100. Those are our technology stocks, different from our other two indexes because they have been in a confirmed up move on the weekly chart for quite a while. However, the two-day chart, a little schizophrenia here, has been in a confirmed down move since the 26th. We've seen it try to cross over going up a couple of times on the, and when I say the 26th, I'm sorry, that was the 26th of August. It's been in a confirmed down move. We saw the Qs, however, continue to trend up because the largest chart is going up. And if you listen to our training, you know that the market, all things being equal, tends to move in the direction of the largest chart. And if your largest chart is up, it's where the market tends to move, even though the midterm medium chart is down, which is typically the chart that we use to set our pace. We like to see both the 2-day and the weekly moving in the same direction. That's the reason we have a little schizophrenia here, and it doesn't make us really trust down moves on the cues, although we do have down moves for the last 3 2-day candles. Again, cautionary note, the candle on the 12th, which is our last candle, is only the first day of a 2-day candle. It did move down and touched the weekly upward trend line. We did see the derivative oscillator heat up and the MACD continue, actually kink over and continue moving down strongly. Again, the Qs was down 0.09%. Let's see what happened intraday. We see that we had big movements down on the Qs on the 11th, followed by a big move down in the morning on the 12th, a little bit of a backup in the afternoon. The jumping in point, if you wanted to get into a down trade, was in the morning on the 11th. That was your entry time. And again, the only caution we give you with jumping into a Qs trade is that pesky weekly chart is still in a confirmed uptrend. And we've had some major up movement in the Qs. You can particularly see it on the 2-day chart, even while the weekly chart has been in an uptrend and the 2-day in a downtrend. The market still tended to move up on the NASDAQ 100. Okay, lastly, going to make sure that we check out gold, which was up 0.16% for the day. Still in a confirmed down move on our 2-day chart. Weekly chart is still in a down move. However, we have had the 2-day trend line breached as per the starting point of the new 2-day candle, only the first day of that on the 12th. Let's look more intraday, though, and check out the 4-hour chart. What does gold seem to be doing? Well, it's been sliding sideways, and guess what? We had seen a precursor to the crossover that happened in the afternoon on the 12th, that is Wednesday the 12th. That precursor showed itself with the flip over of the derivative oscillator in the morning on Tuesday the 11th. It turned green. And really, gold has just been sliding sideways all the way since, gosh, you could go almost all the way back to the 6th when it hit pretty much the bottom. And that was on the morning of the 6th of October. It's been sliding sideways ever since then, settling out and crossed over, going up on this 4-hour chart. Now, the thing to remember on your 4-hour chart is it has been working as a trading chart for us. So where's your entry point? Well, look for one potentially in the morning for an up movement on gold. Now, again, the cautionary note here when we talk about looking for buy-in points. We are not a stock calling service. We're an education firm. Everything we do screams that. We do not call stocks or gold for anyone, but we want you to practice with us until you get good enough and you can make successful trades again and again and again. Then you can make up your own mind, spend your own money, make your own decisions, but we don't make those calls for you. That is where, folks, we ended up the market on Wednesday the 12th as we go into Thursday the 13th. We so appreciate you being with us. We love to hear from you. You can contact us at chartingwealth.com. Be sure to sign up for that newsletter. If you want to help us out, go to iTunes, subscribe to the Charting Wealth podcast, give us a 5-star rating, say something nice about us, helps us with the metrics. You guys have made us as high as number 6 in the world as far as stock market podcasts go. We so appreciate that. Also, go to our YouTube channel and sign up as a subscriber to the Charting Wealth channel. What will you get there? You'll get all of our latest training, and that's the first place that we upload videos, both there and to the people that subscribe at chartingwealth.com for free. Thanks so much. God bless from chartingwealth.com.